Adam Waterous' Strathcona is increasing its hostile offer for MEG Energy and extending that bid until October 20th. It says the offer is higher than the price on the table from Cenovus. Remember, MEG has agreed to sell itself to Cenovus. And Strathcona also says this is 10% higher than its original offer. Let's get more from Cole Smead, CEO and Portfolio Manager at Smead Capital Management. Cole, great to see you as ever. So Adam Waterous apparently determined to get MEG Energy?
Well, he said this whole process that the company that finds the most value in the transaction will end up closing the transaction. And, what Adam is effectively saying is he sees more value than someone else right now. And I say that because, there was quite a bit of hot peppered language in their release this morning, really pointing out that this is one of the biggest take-unders of the last 20 years, from a Cenovus MEG perspective. And he really was criticizing the board's process for this. One thing I think is being missed right now is if you look at the release, they're going to give out 0.8 shares of Strathcona for every MEG share, but they also note that the special dividend, which they had talked about as their plan A, if they don't do the MEG deal, they're still going to give out $5.22 per share of that special if this is to close, which would be to MEG shareholders as well. So if you look at the total consideration, it is not the $30 and change that you referenced a second ago. It's actually closer to 36 all in. And as you see, the press release they already put out, the $5.22 will be return of capital, so it's a non-taxable distribution. So, you put that together, that's a very beefy offer, and I think you're going to have trouble people fighting that. A lot of the chatter had been, if this goes over 30 at some point, Cenovus won't follow. I think Cenovus has had certain synergies that they can really transform and do great things off of. I think that's known. I think the NOLs that are out there are known. But I just say it because this is quite an offer put together, and I think it's probably even stronger than people would have assumed for Adam to put forward to shareholders. The proxy is one of the bigger issues for Cenovus. You have a 14% holder in the case of Strathcona in your shares that you want to acquire, and you need to get 2/3. That math becomes tougher with a 75% vote and a higher offer out there.
And then what about the break fee is it $242 million? If MEG goes with another suitor, it would have to pay that to Cenovus. That sounds like a barrier to any other bidder.
Not if you own the proxy. That's the catch, is if they lose the proxy vote, there's no breakup fee because the shareholders didn't agree to it. And so I think when you look at the timeline, why Strathcona put this forward and pushed it back to October 20th is because effectively their goal is to kill the proxy first on the Cenovus offer, which means you lose the break fee if you kill it on proxy. And therefore that causes that to go away. Now, if Cenovus counteroffers, it would be out of line for the board to keep a break fee in this process because you want to incent price. And so I think no matter what, if Strathcona can reasonably beat that proxy process, you're not going to see a break fee on anything moving forward.
Is, by your calculation, and it really depends on the price of Strathcona Resources, I know, but it does Strathcona's offer look superior to Cenovus's?
It's kind of, I'm flabbergasted, to be honest, Andrew. If you told me that they put out this offer and it got the punk response this morning, I'm kind of shocked. Again, if you go back to the numbers I just said and you ask yourself what you're buying the stock at, what you're going to get in the special that they said in the release, plus what you can translate in Strathcona stock right now, there's a 25% or greater spread to that closing price as of Strathcona's price currently. And this is a deal that's supposed to close by year end if it goes through. I've rarely seen spreads that big. And again, everything that Adam has said, you could take his word to the bank. And so I find it to be like a T-bill-like risk that he would close based on the terms that he's provided, and yet the yield to close is insane. So, if I had to sum it up, so far the Canadian markets have just been wrong on Adam. They continue to be wrong. I'm not saying that Cenovus can't come in and provide a higher price, but they've been wrong about Adam. He's a man of his word, and he's really calling the markets bluff.
That's interesting. We're planning to talk to Adam Waterous tomorrow on BNN Bloomberg. What's the big thing you think investors want to know from him, Cole, at this stage?
I think they're just still sizing him up. They want to know, like I call him the king of Calgary. He is the king of Calgary. They want to know, is he the real McCoy? And I say that, Andrew, because what no one's been saying on the Canadian stock market channel or the commentaries is this looks like Bouchard from Alimentation Couche-Tard back in the day. This has happened before. This is what Murray Edwards did. This is just not new. But you got to remember, all the big money's made before people recognize who these folks are. And Adam's at the early part of that curve, and they give him a lot of distrust. They did with the other folks. Later, years later, when this has been proven successful, it'll be considered a blue chip and everyone will treat it as such. That will come, in my opinion, because I think that's who Adam is as a capital allocator. But they always doubt that at the beginning. And I think that's what we're continuing to see, even with this offer today. I think they'll be proven wrong. Again, Cenovus can always come in and offer higher. But I think they'll be proven wrong about Adam.
And I just want to make sure I have this straight about the special dividend, because it's a twist here. So Waterous is offering 0.8% of a Strathcona share for each MEG share. They're saying that's worth about 38.86 per MEG share. Obviously a moving target. Correct. However, if this higher bid goes through, the special dividend to be paid by Strathcona is going to be about $5.22 a Strathcona share. Right. If it doesn't go through, it'll be about $10. But you reckon that the consideration the MEG holders are getting here you should add $5.22 per share to that? Yeah, because as the prior release, it's a tax-free distribution. So return of capital, which either a Canadian or U.S. holder is a non-taxable distribution. So again, that's just spread. That is spread to this deal close. And I don't think everyone's really paying attention to that. I've seen maybe one note fired off by one of the brokers that pointed that out. And so, again, if someone gives you close to $36, part cash, part stock, in this total consideration by year end, I have a lot of trouble wrecking those numbers against a lot of other deal terms. What would someone have to raise their offer to match that? That's a pretty big consideration. In the case of the Cenovus deal, I'll use ourselves, like we're U.S. holders. In the case of the Cenovus transaction, we have to pay taxes on our MEG transaction. In the case of the Strathcona transaction, we don't pay any taxes and we get this tax-free distribution. We have to think of all externalities, and I just say that because that might be different for different holders depending on when they bought it. There's a lot of ARBs in MEG. So I think the number one consideration today is price and the value they get out of it. It's not about the structure of the deal. Always great hearing from you, Cole. Thanks. You always drill into the details for us. Really appreciate it. Cole Smead joining us there, kicking off the show.